In this video, we're going to talk about cash flow versus profit and what you should focus on. And you might be surprised by the answer at the end of the video. So I'm going to start with some definition. I know at the surface it seems pretty simple. So what's cash flow and what's profit, but there's a tremendous amount of details that go into the two definitions and the difference between the two, and also there's a little bit of accounting in there. So I hope that you stick around, and then even if you don't understand exactly every single detail, maybe you want to watch the video a couple of times. I'm going to try to keep it as easy to understand as possible. Yes, I think it's important to know the difference, and you're going to like the answer, I believe, at the end. And my focus here is not to talk about accounting. I don't want you to become a CPA, but I want you to learn the difference between the two, because these are important in how you run your business. And this is what we want to talk about here. But I know that some of you are keen on accounting. And I think I just want to point out one difference here is that the examples that I'm giving here are based on a cash basis method, not on an accrual method, because I know this is going to come along and I'm going to have comments. They're going to say, how come you didn't, that's not exactly true, blah, blah, blah. So I'm focused on cash basis here, trying to keep it as simple as possible. So bear with me. Profit is the amount of revenue that is left after you have paid out all your expenses. So that includes the expenses needed to create your product or your service, as well as operating expenses related to, for rent for your business, salaries, etc. So that is the profit left at the end. Cash flow, on the other hand, is focused on cash flowing in and out of your business. It seems to be the same thing, but there is a slight difference. So profit is more indicative of the success of the business, while cash flow is more focused about the inflows and outflows of cash out of the business. So it's slightly different. One of them is based on the profit and loss statement, or the income statement, sometimes it's called, where we have the revenues and expenses and the profit. The other one is more about cash, is more about a balance sheet exercise. So if you look at the assets and liabilities, it's often the cash flow is about movements between your cash and a liability, or cash and another asset. So just think about it this way. If I use the car as an analogy, profit is the speed at which the car is moving forward, and cash flow is the fuel. So it is possible for the car to be moving forward with little or no fuel, but eventually it's going to stop. Even if it's going down the hill, eventually the hill will end and the car will stop. On the other hand, I can have a lot of fuel and the car could be going forward, or it could be stopped because there's a problem with the engine or a flat tire. So that means there's something wrong with my business that's not generating profit. It's not moving forward. Or even worse, I could be going backwards, where, I'm losing money every month or every quarter, even though I have a lot of cash in the bank. Well, we can expect that cash is going to disappear also. I think it's time for an example. We've been talking a little bit too abstract in the last few minutes. So let's say we have a house and the tenant is paying rent, and let's say the rent is $1,000 and the expenses are $300, and there's a mortgage payment that's $500. So if I look at my rent, I pay $1,000 minus the expenses minus the mortgage payment, I am left with $200 in net cash flow at the end of the month. So far, so good. Seems pretty simple. If I was to enter that in the accounting system properly, I could run the profit and loss statement, which would show me my revenue and my expenses and my profit. What might surprise you is that maybe your profit is going to be actually higher than you thought, because what's going to happen, let's say you have, instead of $200 in profit, you might see $300 in profit. Any clue where this is coming from? Why you would have more profit than the cash that you're making? Well, the clue is in the mortgage payment. So when we look at the mortgage payment, there are two components to the mortgage payment. One of them is the interest, obviously, that we're paying to the bank for borrowing the money. And another piece of it is actually paying the principal on the mortgage itself, on the loan itself. So that interest is actually an expense, and it shows up in the profit and loss statement. And that extra $100 that's not showing up in the profit and loss statement is actually a movement on the balance sheet, basically cash from the bank that is moving to pay down the loan. So this is why the cash is lower on the net cash flow when you're looking at it from the net cash flow side of it. And if you look at the profit and loss, that's why the profit is higher by $100. That $100 basically went from your cash, your bank account, and to pay down the loan, a liability, reducing a liability. So this is just one example where this kind of discrepancy can occur between the cash flow and the profit. And it happens a lot whenever you're buying any kind of assets. Let's say you're buying a car or a printer or something like that. Not a printer, but a car, some assets, some inventory for the product that you're making. Whenever you're buying let's say you're doing a flip and you're buying a property, that's also going to be an asset that's going to be built. So all these things are going to have an impact on the cash. It's going to reduce your cash dramatically. When I buy a property to be resold, that's going to reduce my cash significantly. But when I'm going to go and pay for utilities and pay for property taxes, it's going to affect my cash, but also my profitability. So when you buy an asset for your business, it tends to not show up as in the profit and loss statement, but only show up on the balance sheet. The other transaction where this discrepancy can occur is whenever you repay debt. So we talked about the example of the mortgage. So you start paying a part of the mortgage payment goes towards the principal of the loan. So this is another example of that. If you're dealing a lot with, for us in our business, we're doing a lot of private money lending. So in these transactions where we're paying out the private money lender, this is entirely in the balance sheet. So it's going to show up a dramatic impact on the cash, but really very little impact on the profit and loss, because the amount of interest that we're paying compared to the amount of that we're borrowing there's a big discrepancy. So it's going to be a big change on the cash, a little bit of a change on the profitability. So these are the two. There are other components like any kind of, there's a delay in a transaction, prepaid expenses or anything on credit. So these kind of situation would cause the profit and loss to be impacted and maybe the cash flow not to be impacted yet, like prepaid. If you pay any kind of renovations in different draws and stuff like that. So that's another situation also where you might see a discrepancy between your cash and your profitability. Eventually, some of these things are going to catch up and they're going to sync up, but you're going to see some discrepancies as well for these. So I want to answer the question. So if we look at our business, in my business, Martel Turnkey, so we buy distressed property, we renovate them, we rent them out, and then we sell them to investors who are looking to build a passive income portfolio, achieve financial freedom, build a legacy for their children. So in our business, we see this impact very significantly. The reason why we see this very significantly is that we do about 100 single family rentals a year. And actually currently we have 54 concurrent projects going on at different stages of development. Some of them are just getting started, they're just getting the construction started, or we're just closing on the acquisition side of it. Others are in the middle of construction, and then yet we have a bunch of other properties that are on the sales on our website to be sold, and they're ready to go. They're waiting for a tenant, etc. So this is these are the number of projects that we're looking at, 54. One of the reasons why I did this video is that I get a lot of questions about which one should I focus on. Should I focus on cash or cash flow, or should I focus on profitability? And the answer is really that you should focus on both. So we focus on the profitability for each project. So we're making sure that, you know, the cost, the renovations and all of that are in line with our target profit. But at the same time, as you can imagine, when we talk about the cash, we're constantly looking at how much cash flow we have, how much cash we have on hand. When we look at our bank account, that's a certain level, but we know that there's a lot of expenses, renovations that we have committed to that haven't been paid yet, because we only did 1/3 of the draws or half the draws on some of these renovations. So we know there's a lot more to be paid. So for that reason, we have to monitor that. We have to monitor what's left over on the renovations to make sure we have cash to pay for that. So we preemptively deduct these costs up front to make sure that we don't overextend ourselves, buy too many properties, start too many projects, and then run out of cash. Again, cash is the fuel. So if you run out of cash, I can't complete my renovations. There's a lot of things that's gonna stop very quickly if I don't have the fuel. So in order to do this, we've built a tool to basically that pulls the information from our CRM, pulls information also from the accounting as well. And then we put all that together. We look at each project. We can very quickly look at each project, see what stage they're in, how much renovations are still to be paid. And then we do a projection week by week. Automatically, we have a projection the next 4 weeks. What is going to be the net cash flow position next week, this week, following week, etc. So that we make sure that we have that cash that we need to move forward. What happens if we end up in a situation where we have negative cash flow for 1 week or 2 weeks? Then we know that we look at what flexibility we have in order to pay these renovations or these next draw. So there's a way for us to say, well, you know, instead of paying you that week, we're going to pay you the next week. We look at the progress of the projects. How likely are we to have to pay these bills next week? We can also tweak kind of like when we buy other properties, because we look also at the acquisition side and how this affects our cash flow as well. So at the beginning of the video, we talked about what you should be focusing on between cash flow and profit. I hope that this video you learned a lot from this video, and I hope it was obvious that we really need to look at both. We need to look at the cash flow, because this is the lifeblood and the fuel of our car, of our engine. And profitability is to want to make sure that we're moving forward, not backwards, that we are also going in the right direction. So really you need to look at both and have the right tool for measuring both. For us, in terms of cash flow, we had to build our own tool. There are some tools to do that as well, but we wanted to do we wanted to project our cash flow moving forward. So we had to build our own tool to do that. So again, I hope this was helpful. Make sure you watch the other videos on the channel, and don't forget to subscribe.